Welcome to AiCA SKYBLUE book series presentation on ICFR auditing. I'm your host, Robert Llewellyn Kilby, and in this presentation I will discuss the state of ICFR auditing in the public domain. You will see how accounting firms that are registered with the Public Companies Accounting Oversight Board, PCAOB, to audit public companies in the U.S. are deficient in performing their statutory responsibilities. The Public Companies Accounting Oversight Board, PCAOB, statutory responsibilities. Background. The Public Companies Accounting Oversight Board, the PCAOB, was created by the 2002 Sarbanes-Oxley Act of the U.S. Congress to inspect and oversee accounting firms that are registered with the PCAOB to audit public companies, security brokers, security dealers in order to protect the interests of investors and further the public interest in preparation of informative, accurate, and independent audit reports. Public companies are required to register with the U.S. Security and Exchange Commission, SEC, to sell stocks and bonds to the public on the National Stock Exchange. Brokers and dealers in securities are also required to register with the SEC. Deficiencies the PCAOB cited in its review of the public companies 2018, 2019, and 2020 audits. While researching AiCA SKYBLUE books and publications, AiCA research team reviewed a sample of the population of deficiencies the PCAOB cited in its inspection report for the world's largest accounting firms for 2018, 2019, and 2020. We analyzed the deficiency to determine the root cause. The following data points I will discuss later were taken from the PCAOB website. Showed that 90% of the deficiencies are related to the integrated audit of financial statements and internal control over financial reporting, ICFR. So now, the deficiency the Public Companies Accounting Oversight Board, or the PCAOB, cited in its review of public companies 2018, 2019, and 2020 audits are as follows. BDO is an accounting firm, one of the world's largest accounting firm. Based on the audit that was done in 2020, as you can see on screen, the audit type related to the integrated audit of financial statements and ICFR for 2020 were 24 in total. 17 of them were related to the integrated audit of financial statements and ICFR, and 7 were related to financial statement audits only. So what that means is that the intersection of the IT auditing realm within the IT auditing discipline were deficient, and 17 of them were related to those deficiencies, and the financial audit statement audit only, which is just the accounting principles and the financial accounting principles and so on, were 7. Likewise, in 2019, there were 26 total audits that had deficiencies from the PCAOB. According to the PCAOB, 21 of them were related to the integrated audit of financial statement and ICFR again, and only 5 were related to financial statement audits. So for BDO finally, the total deficiencies were 23 in 2018, and 20 were attributed or related to the integrated audit of financial statement and ICFR, and 3 had to do with financial statement audit only. Let's look at Deloitte and Touche, another of the largest CPA firms in the world. Again, focus on the 4th section, which is audit type. The integrated audit of financial statements and ICFR, out of the 53 deficiencies that were detected, 50 of them were related to the integrated audit of financial statement and ICFR, and 3 of them were financial statements only. Likewise for Deloitte, 2019, there were 58 deficiencies cited by the PCAOB. 47 of them were related to the integrated audit of financial statement and internal control over financial reporting, and 11 were attributed to financial statements audit only. And in 2018, out of the 52 deficiencies that were cited by the Public Companies Accounting Oversight Board, 49 of them were attributed to the integrated audit of financial statements and internal control over financial reporting, and 3 were for financial statement audit only. Now let's look at Ernst & Young. Ernst & Young is one of the big four in the U.S., big four accounting firms in the U.S. In 2020, they had 52 deficiencies that the PCAOB cited in their audits of public companies. 47 of them were related to the integrated audit of financial statements and internal control over financial reporting, and 5 were related to financial statement audit only. Now, for 2019, Ernst & Young, 60 deficiencies were cited, 54 were attributed to the integrated audit of financial statements and internal control over financial reporting, and 6 of them had to do with financial statement audit only. And as I said before, in 2018, 54 of them total deficiencies cited, 53 were attributed to integrated audit of financial statements and internal control over financial reporting, and only 1 had to do with financial statement audits. Grant Thornton, one of the largest 6 in the U.S., I assume they are now, out of the total 29 deficiencies, 27 were related to the integrated audit of financial statements and the internal control over financial reporting, and financial statement only were 2. So in 2019, 31 was cited for Grant Thornton, 25 had to do with, again, integrated audit of financial statement, internal control over financial reporting, and 6 had to do with financial statement audit only. Now, in 2018, there were 32 cited, 27 had to do with integrated audit of financial statement and internal control over financial reporting, and 5 had to do with, again, financial statement audit only. KPMG, we had, in 2020, there were 53 deficiencies cited, 47 of them were integrated audit of financial statement, internal control over financial reporting, and 6 of them were financial statement audit only. In 2019, there were 58 deficiencies, 52 were ICFR related, 6 was financial statement related. And likewise in 2018, 52, 51 of them were ICFR related, and 1 was related to financial statement audit only. Finally, PricewaterhouseCoopers. In 2020, there were 52 deficiencies cited. 50 of them were related to the integrated audit of financial statement, ICFR, and 2 were financial statement audit only. It's likewise in 2019, there were 60 deficiencies. 52 had to do with integrated audit of financial statement, internal control of financial reporting, and 8 had to do with financial statement audit. And finally, 55 deficiencies cited in 2018 for PricewaterhouseCoopers. 45 were related to the integrated audit of financial statement, internal control over financial reporting, and 10 had to do with financial statement audit only. So AiCA companion books and consultancy are designed to remediate ICFR deficiency in the public companies audit, as we saw over there. The following SKYBLUE companion books and consultancy are designed to teach financial auditors the skills and competences needed to remediate their lingering ICFR deficiency reported in the Public Companies Accounting Oversight Board inspection report for the past several years. The first, second, third, fourth, and fifth. Volume 1 is the standard principles and rules for auditing financial statements in the cloud ecosystem. Volume 2, testing strategy, test cases, and test procedure for auditing financial statements in the cloud. Volume 3 is a consulting practice. It's practical application of automated testing tools, techniques, and platform. And volume 4 rather is the how to conduct risk assessment and how to confirm cash and general ledger accounts. So these are the books that are needed. These public companies need to, and including the consultancy, to resolve or remediate their lingering ICFR deficiencies. We are a public benefit company, which means that within our corporate charter, we have committed to providing public services to public companies, and we have chosen the accounting profession as one of the entities or the industries that we are going to provide public benefits to. So these publications can be purchased at the following outlet: www.aicamembers.com, duransbookstores.com, and bookstores near you. I hope it was informative, and again, thanks for your undivided attention.